Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We'll try and give you a nice little sort of market summary of what I see happening in the market this morning. Hello, everyone. Yeah, it looks like YouTube's rocking and rolling, so that's good to see. Happy Monday morning, TGIM, I suppose. We just got through the big October options expiry. And we're in kind of like almost like the aftermath. What's the dust is settling. People are getting repositioned for the market going forward. So, Mondays we really don't want to infer too much into price action. Usually it's a lot of sort of follow through from options expiry, especially on the Monday following options expiry. But as always, we put together a nice little chart deck here of what it is we're taking a look at here in the market and give you some ideas to chew on here. So first and foremost, I have to give accolades to Goldman Sachs for coming out and making a bullish call on the British pound. There, I guess 1, 2, 3, 4, 5 weeks ago. They were a bit early, and the market did have to work its way a bit lower. I thought we were going to have to come down and eat these tails, and my hunch is at some point we will. But nonetheless, British pound ratcheted back higher here to the detriment of the US dollar index. Tough to say. If we look at euro, same sort of idea. It's always a challenge to make sure you get the right symbol here for trading view. 6E maybe? I can never remember what the hell this is. 6E? Yeah, there we are. And not only out of the British pound do we see strength, but we also seeing strength out of euro as well. So there's the euro up top. It's actually carved out an interesting weekly W here. So methinks that the winds of change are blowing here. I suppose we could make the argument looking at the US dollar, and we've talked lots about this in recent past. Fractal on the weekly charts, pretty significant message. Boom, boom, boom. We had pointed out that this was probably going to be a pretty important level, and sure enough, the market lost it and just dumped. The good part about this is technically this is a risk-on proxy, i.e. people are not just blindly running into the US dollar index and buying US T-bills and just burying their heads in the sand. They'll actually take a bit of risk out there in the world. And like we said, things like euro putting in weekly Ws, British pound rallying smartly off its bottom. The only concern that I have with all this, of course, Brian's always worried about something, but does this not maybe be a little bit hasty, a little bit early, in that the Brexit event is supposed to happen here at the end of October? So, if anything, we should probably just put like a vertical line over that Brexit event window, which looks like it's going to be that week there. So let's see what happens. I got a sneaky suspicion this is buy the rumor, event happens, sell the news. And it was interesting, it's always a soap opera with this crazy Brexit, but in the lounge this morning, people were posting videos about the Speaker of the House of Parliament shot down some recent vote. So, it's a major soap opera back and forth. Never a dull moment. But I think we can infer that there is a bit of a shift going on here in the market right now. So we should be cognizant of that. If we look at our risk on, risk off conversation, out of the data that we're seeing here this morning, does that sort of validate? You can see risk off proxies, yen, bond, gold. They're all coming off here this morning. Of course, I strapped on my bond put option up top here, and that trade's just working wonderfully. Way to go, Brian. So I'm feeling pretty positive. Again, this is secret options formula. I don't really want to be selling this option until it gets down into this 130.40 area. So there's really not a heck of a lot for me to do right now. Mind you, if the put premiums here get higher, keep in mind it's a 135 strike. So, if I start seeing these put premiums at like $4 or $5, then that will basically imply what the intrinsic value I'm looking for out of this option will be. 135 minus 130 equals about $5. So these options are sitting at around $3 right now. So I'm feeling pretty good about the trade, but I don't want to tinker with it right now. If anything, I just want to let this thing work. So moving on, risk on seems to be catching a bit of a bid, as we talked about here just a moment ago. The only one that actually is surprising me that isn't doing a little bit better is the oil. But, we'll talk about this later on. There is some interesting anecdotal evidence coming out of the oil patch that the oil stocks are feeling a lot better. So we may see this risk on proxy catch a bit more of a bid. Full disclosure, and really, I even talked about it on the site today. I'm still looking for this stock market actually to put in a pivot low somewhere around the end of October. What I'm worried about here is we might actually be setting up a crash scenario here. I mean, don't bank on it. Obviously, nothing's written in stone. But we've rallied just basically smartly right off the lows, right back up into those old highs. There's that funny little gap that I've always been mentioning. I wouldn't be surprised if they pop the stock market up top here, and then into that month end we get some sort of calamitous dump. So I'm still sort of looking for that scenario. As I said, I went and bought another put option here as basically an insurance policy. I've got 3 of them on now up against the top end of the range. I'm just going to let the trade work. It's a March option, so I'm not really in any hurry. And I do like the idea of taking short shots up somewhere up in this area. And I've got 3 of the 4 bad boys on the book. So I'm just going to let that simmer. There's nothing really to do there. As I said, it's a March position. And I'm actually looking at it as more of like an insurance policy because I've got a good, 10, 20 grand on in various different stock proxies. I would like to have my ass covered a little bit if the stock market does tank. So just an FYI there. Risk on, still working its way up. Wondering what's going on with oil. And of course, our risk on, risk off conversation. You can see Bitcoin's trying to join that sort of risk on conversation here today. The only one that actually is the outlier, ironically enough, is the oil. Risk off, all heading lower. Risk on, stocks and Bitcoin are heading up. Oil is still just sort of floundering here. So in essence, that's our conversation about risk on, risk off. It's really interesting looking at these weekly charts. You can definitely see problems developing in the bond market. We always say, what are we supposed to think if we ever see the market smiling at us? And in a weird sort of way, we might actually find that one of the reasons why the stock market has to come off is that maybe the bond market just craps right out here. And people in the stock market look over at the bond market and go, holy crap, interest rates are ratcheting higher here. Maybe we ought to take the stock market back down. You can see that same sort of pattern in the gold market right now. A little bit of a market is smiling at us. I've been talking to you guys about this recently. Pretty dangerous situation in the gold right now. Me personally, I like to follow the biggest gold stock around, and this is a darling for the Canadians, American Barrick. It broke the triangle. It flirted with that breakdown, rallied back up, and now we're back down against these lows. Gold and silver index still working its downside wedge pattern. I could very easily see a nice little dip against these lows again here. That wouldn't surprise me. So we're still a little bit early to be thinking about bullishness out of the gold and the gold sector. I don't see any W's here yet. So, risk on, risk off. If we're thinking about gold as a risk off proxy, we see what the bond market looks like. The yen's coming off here. I don't think that should really surprise anybody. And gold bugs, you just got to cool your jets until this thing cleans itself up a bit. Individual stock names. I think I talked to you guys. I did a plug on the Broiler Chicken show yesterday about what is it I really like to find. And the answer, of course, is weekly W's. We started off the conversation today with the Daily Brief actually talking about the really nasty situation that's going on in southern Texas right now. They actually have like tornadoes hitting the ground. This Norboard, they're in the, and I have to get this right, Oriented Strand Board manufacturing business. OSB is their symbol. Basically, Kevin, my co-host here, corrected me on that. Did I get the name correct? Oriented Strand Board. I think that's the name. Think of it as almost like glorified drywall, but it's the drywall for outside, not inside. That's what I've been told. But hopefully everybody can see. Nice triple bottom here. I'm feeling optimistic about this thing. I took my shot, and you can see trade's working okay right now. One market that really jumped out at me, and again, this is our conversation going back to risk on, risk off. The oil market should be a little bit more uppy, in my opinion. But again, remember, that's just Brian's opinion. Doesn't mean jack shit. But the point that I would just make is, again, kind of like our conversation about gold stocks. I think stocks ultimately lead all commodities. So if I look at like a stock like Barrick, it's like, holy crap, I got to be careful here. And I think you can actually see the exact opposite in some of the oil stock names. So in particular today, I wanted to mention this stock. And of course, everybody who remembers George Bush Jr.'s vice president, really popular guy, not. Anyway, anybody who hears this company's name instantly thinks of him. But that's here nor there. I couldn't really care about the guy, and frankly, I think he's pretty close to passing away. He's getting so old. But it was really interesting to pull up Halliburton's chart here this morning. And as you can see, something's going on down here. Of course, the exact opposite to what are we supposed to think if we see the market smiling at us. I like to call it a smirk, but it's not really that smirky. But nonetheless, you can see that there's some sort of bottom trying to develop on Halliburton. And when I actually pulled up the chart this morning, where should I show you this? Right here. This is actually, and you want to watch these videos. And Brian, I want to learn something. I want to, have some sort of takeaway from this that I feel like I got something for free. Everybody learn this one candle. This candle is the price action opened up this morning below 4 previous sessions candles, and then turned around on news that their earnings were actually pretty good. And now we're sitting above 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's a huge ton of highs. This is this one candle, and of course, we'll have to see how the day ends. You never know how this stuff finishes. But this one candle is actually what's called a key reversal. In classic candlestick terms, this is called an engulfing bar, where price engulfs the previous session. If we can engulf more than 2 previous sessions, it's called a key reversal. Very, very powerful signal from the market. Everybody should look at this chart and go, gee whiz, what a coincidence. That all came in right through a big fat reload zone. And you should look at the W's and go, okay, well, that makes sense. What's really cool is when we look at options on this, and this is Brian's TRI secret options formula. I actually see I can buy a June 2020 call, basically the next 8 months. $29 call for only 2 bits. If the market goes to just this 52-week range 50% roll, then this option will be worth 75 cents. 77 cents, beg your pardon. If we can rally back up to value high, back to the original trend lines, this is the weekly 50% roll. This silly option is going to be worth $8, $9. That's looking pretty attractive. I can buy 6 months of time, where if it hits the 52-week range 50% roll, it will be more than double intrinsic value, what I have to pay for it in time value today. And if we knock the cover off the ball and this thing really ratchets up, then we could hit an absolute home run on this trade. So definitely something I'm very interested in. So there's a couple names. One that I am in, and one that I'm seriously taking a good look at right now. Heading on over to crypto. Not a heck of a lot to report new here. I mean, the basic message, I went into great detail through the Broiler Chicken show yesterday, so if you want to get that big detailed sort of summary of the corn. On balance, I still think right now we're going through the 50% oscillation game. So we're just right around that 50% level. Very normal, very natural. Have this key low institutional fingerprint. We came back down against that low. Not a big surprise that we see whoever put the bottom in on this bar has said, hey, I'm long from here. Get your ass out of here. So that doesn't surprise me. The question ultimately is, do the sellers overwhelm demand and whoever put the bottom in here? And if they do overwhelm demand, that potentially could set up something like a head and shoulders, something along those lines. So, well, this is a pretty important level for the corn. If we lose this level, look out below. And remember I had said earlier that I'm actually feeling like we could actually be setting up a crash scenario. So, in a weird sort of way, I think you can, I don't really have a time window on this. Maybe I'll find some other charts to get sort of time references for you guys. But just a very simple AB equals CD. Notice 28th of October. There's that end of the month kind of talk again. And on the weekly basis, unfortunately, hopefully everybody can see, all we've done here is created another diamond pattern. It's a sloppy one. This low is lower than this. So I'm not really, it's actually not a textbook diamond, but really nice inside bar. So off a weekly basis, this is basically our trading range. Wicks and tails like to be eaten. So get ready for a bunch of back and forth. And that's a pretty wide range, right? That high goes all the way up to, where is that? 88.26. So welcome to your new trading range. For the purposes of this video, I won't go too much into the different setups. All I will say is we talked in the Broiler Chicken show yesterday about how a lot of the day traders I'm going to call this a swing trade. The swing traders were hunting this PRZ right down here, AB equals CD. That was also against this crazy trend line. Talked lots yesterday about how you really shouldn't take a trade out of trend line, and if anything, going short, anticipating this break right here is extremely dangerous. Well, I'd say the exact opposite now. So we've had this trend line working for quite some time off the top, right? If I zoom out, this goes back all the way to the original top. So the markets come right back up to this trend line. And I think on one of these charts I even had, actually I got rid of it. I actually thought we were going to just sort of sit in this triangle and just carve out. I suppose this is a conversation about which market has the true downtrend line. If we zoom out, right, you can see this was drawn off of that high and that high. So this market, you can see, we popped up above the trend line, and now we're just asking, okay, do we actually want to accept above the trend line? Also a really good example, and again, every exchange, crazy crypto, you don't know, it's so schizophrenic, you don't know which market to follow. In this particular case, this is Coinbase, that trend line, we are basically battling right at it. And of course, our general rule is we don't want to take a long up here. That's asking for trouble. If you are bullish, then what we really want to see is a nice W on the other side of this trend line. So, maybe this is a bull. Totally awesome. Could be. But right now, what I actually think happened, and as I had sort of said, this was, I was very, very pleased to see people on the site were posting that they took these long shots. Great trade, everybody, whoever did. If I just go off of the basic W pattern here, down here, especially if I change it to a line chart, you'll see it, right? The W down here. And then I think this actually set up actually a very, very polite, very normal, what we call an El Tangonator, where we had trade location, reload zones, PRZ of AB equals CD, so definitely trade location. We look down at our momentum indicators and we see confirmed divergence as we're coming into these levels. We have a warning here that Willie actually got stupidly oversold at one point as we were working our way down into here. Nice W's coming in off of the price momentum oscillators through this event. Set up a nice entry, like I said. You can even see this. This was the sick traders trade level. And we politely came up and tagged 50%, which produces a nice 2.61 risk reward. Actually, pretty normal. Pretty textbook, pretty cliche. The only issue now is that the end of the move? And, as I had said earlier, for us to actually believe that this thing can continue on, we got to see W's over here. Right now that we're at this trend line, you can see we're kind of floundering right now. We'll finish off today's broadcast with an interesting coin for you to take a look at. Again, another gift from Mr. Duke. I don't know whether you can say that or not. The Duke of Albuquerque. He pointed this out to us this morning. Beautiful looking double bottom here. I mean, if you buy W's, this is absolutely textbook. So, sexy level there. If you zoom out, gee whiz, this thing sure has a long way to run. If I just do a simple 50% level off of that, look at a 50% level, way up there. So, and what's cool to see is, holy moly, look at all the volume. We always say volume speaks volumes. So clearly there's something going on with this Horizon, ZEN. And the Duke tells me that this is part of Barry Silbert's play in crypto. So maybe do your due diligence. Take a look at the fundamentals. Do you like this story? Good old Brian, he's going to tell you don't chase. If you are interested in this name, just simply draw your reload zones. And what a coincidence. I thought this was so cool. Great way to finish the video here today. Lo and behold, reload zones, 61.8 fib to 78.6, happen to line up perfectly off of that original bottom. So I don't really have a problem going in and bidding 4,200 sats, thereabouts, for this thing. And if anything, the message that I'm trying to tell people now is, I think into the end of the year, tax loss selling, depressed prices, this actually looks like a really good market to be going and hunting and shopping in the altcoin space. And if Bitcoin does work its way down to 5-6 grand, I think that would be an excellent place to start thinking about buying some Bitcoins. Okay, I think we'll leave the video at that for today. Hope you enjoyed the presentation, giving you some stuff to think about here. Obviously, no hurry to do anything in the market. Slow and steady wins the race, and PMA for the win. So have yourselves a great day, everybody. We'll see you all tomorrow. All the best, and bye for now.